Tom Piotrowski, good morning to you. How are our numbers looking today?
Pete, reasonably good actually. We've got the futures pointing to an improvement of around 0.6% for the ASX 200, which is perhaps a little bit unexpected given the underperformance that we saw for mining materials and energy stocks in the Northern Hemisphere. And that underperformance reflected growth concerns in the face of the latest trade developments, which will see 30% tariffs, for example, applied to European imports into the United States. So that was a primary discussion in European trade, and as a result we saw European stocks under pressure. The German market, for example, was down by around 0.4%. We saw car makers in particular under pressure, so familiar names like Volkswagen, Porsche, BMW, they were down in the order of around 2%. The things were saved a little bit by a suggestion from Donald Trump suggesting that there's room for negotiation, which is a mixed signal given the fact that he's said explicitly that these letters that have been sent out are the deal and that they'll come into effect on the 1st of August. The US markets were under pressure in the early part of the session, but were able to come good by the end of the day. The gains were modest, but it was a reasonable turnaround from the deficit that they saw in the early part of the session. The Nasdaq, for example, was up by 0.25%. You saw the Dow up by a little under 0.25% as well. The S&P 500 up by 0.1%. We've got some important inflation numbers in the next couple of days, Pete, and also the US company earnings season starts in the next couple of days as well. And expectations are quite low, and that is actually given some hope to analysts that organisations should be able to eclipse those expectations reasonably easily. So that's part of the reason why there's a quiet optimism about US markets generally at the moment. The local picture today, we've got some consumer confidence numbers to look at, but all eyes will be on China. We've got the monthly data release that includes GDP, retail sales, home prices, fixed asset investment, quite a bit of it, and it will be seen sternly through the lens of growth, the latest stimulus measures that the Chinese authorities have applied, and particularly what it might mean in the tariff context as well.
Gotcha. Tom Piotrowski, thank you.